In May 2020, I started an experiment to see which valuation ratio was the best. The experiment was so successful that I've decided to take it another step and actually invest even more money into these particular strategies. But the success was not in the way that I originally thought.
This video is for educational purposes only. It should not be considered investment, legal, or tax advice. It is not an offer to buy or sell any security. Past performance does not indicate future results. Investing is risky.
The results of this little experiment did not necessarily surprise me in which valuation ratios did the best. What surprised me was how well each of these portfolios did. All 5 of them outperformed the S&P 500, the S&P 500 Value Index, and the S&P 500 High Dividend Yield Index. And the real surprise is I did absolutely nothing to these portfolios for over 800 trading days. Despite that, all these portfolios did exceptionally well, with the worst performing still beating all 3 of those indices that I mentioned, and the best performing returning 76.3%. I've decided to start an experiment focusing on 2 components. The first is this high shareholder yield concept, which I really believe is one of the best single ratios investors can look at. It's a bit of a more dynamic version of the high dividend yield. Basically, it just combines dividend yield plus whatever the change in a particular stock's shares outstanding over the last 12 months. So if the company is buying back, say, 3% of its shares, and it has a 2% dividend yield, that would have a 5% shareholder yield. Meanwhile, if a company has a 6% dividend yield, but maybe they're diluting shareholders by, say, 2% per year, that would result in a net shareholder yield of just 4%. So in this particular case, you would actually invest in stock A in the shareholder yield portfolio, and you would invest in stock B in the high dividend yield portfolio. I personally strongly believe this is the correct way to look at it. So apparently, if you write down your goals and share them with others, you're more likely to achieve them. And the goals of this portfolio are first to outperform the S&P 500 index over the long term. This may be a bit ambitious, but I'd like to generate a total portfolio value of $500,000 by age 50, which would be 2040 for me, and that would just be from this portfolio alone. The third goal is to pay $0 in capital gains tax over this entire period. This will all be done in a non-taxable account. And basically this implies that I'm never going to sell anything or net sell anything at a profit. I may end up taking losses throughout the time for losing positions if there's better stocks to replace them with, but the goal is to pay $0 in capital gains tax or potentially even get a net tax refund over that time. And then the fourth goal is to never think about the portfolio. I'm only going to think about it whenever the time comes to buy something else. It's never going to be something that's on my mind when the market's going down, or basically no matter what's happening. I'm just going to continue to hold these things for at least a decade or longer. So this is a bit of a psychological restriction on myself to basically go into this with the idea that I'm never going to sell anything ever. So it's going to be out of sight, out of mind. And I think that may actually have a bigger impact on my quality of life, which is another little side experiment that I'm doing here. I've been doing some research on money and happiness, and it's pretty clear in the research that the more you think about money, the less happy you are. People that were shown just pictures of dollar bills before being asked to do tasks like eating a piece of chocolate or something, they actually enjoyed whatever they were doing less when they were primed by thinking about money. So I think this experiment is kind of partially a financial one and also partially a psychological one. So I'm really excited to report to you all, I guess, the sort of the softer factors of how this portfolio is making me feel relative to other strategies that I have. So here are the rules, and I put them in quotes. I may decide to change them if I find something that I think might work a little better. But for now, I'm going to buy 33 stocks equal weighted. I'm going to invest $30 in each stock per month. I'm going to buy the highest 33 shareholder yields in whatever that particular month is. And those stocks obviously are going to change over time. I'm going to roughly equal weight the S&P 500 sector weights at the time of the initial investment. So if, say, the technology sector is 30% today, that means I'll buy 10 tech stocks, the 10 highest shareholder yielding tech stocks as of basically today. If technology weighting drops to, say, 20%, then I would buy, what is that, roughly 6 to 7 different technology positions. So the idea of this is basically just to not get any additional exposure to sectors, just isolate stock selection in this particular experiment. And number 5, since I'm going to be holding these for such a long time period, I'd like to have at least a narrow economic moat, and that's as defined by Morningstar. So again, that's just as of this particular date. So some of these stocks may go to wide moats or they may go to no moats, but I won't sell them as long as they had a narrow moat at the time that I bought the portfolio. And then the 6th step is I'll just basically do nothing for at least 10 years, and that applies for each one of the different portfolios. So whatever I do in August of 2022, basically I'll just hold that until at least August 23 without selling any positions at a gain or taking any profits and reinvesting them in losers or basically doing anything at all. I'll just keep adding $1,000 to new portfolios over time. So there'll be an August portfolio, there'll be a September portfolio, et cetera, et cetera. And then the 7th, I'm going to post these results on a regular basis. And I've said regular because I think if I committed to monthly, maybe it wouldn't happen. So I don't know, maybe I'll do these quarterly at least or semi-annually, definitely at least annually. I'll let you guys know how these portfolios are doing. And then if you want to know specific individual stocks or maybe get a little bit more regular updates, I'll be posting those to a smaller group on Patreon or people that support me via YouTube. So if you want to, sign up for that, support the channel, I'll let you know kind of what the individual stocks are. Again, I'm not recommending that anyone should buy these or follow along with me in this particular experiment, but I do think it's going to be really fascinating to see what happens, especially, 2, 3, 4 years down the road. So what are your predictions? Do you think this little experiment is going to be successful? Do you have any questions? Do you have any ideas? Let me know in the comment section if you think I'm completely insane for trying this. What about this strategy do you think is good? What about it is bad? Do you think it's going to work? Do you think you could actually beat the S&P 500 index by doing nothing for 10 years? I'd love to hear your thoughts down below. My personal prediction is that I will. I mean, I wouldn't be doing this if I didn't think it was at least better than a coin flip, that this was going to work. But whether it works or not, I think it'll be a really fascinating experiment, and I hope that it will be a success. If not, well, we'll have some fun doing it, and I'm sure, the portfolio will probably grow at least somewhat over the years. I guess to me, the worst case scenario is that it maybe underperforms a little bit relative to the index, but I think it's going to force me to be really disciplined in taking certain investment actions and not paying any attention to what's going on in the market environment around me. So anyways, I'm going to go. I think it's been too long of a video already, but I'm really excited for this experiment, and I look forward to keeping you all posted on how it's going and sharing with some of you that are interested what specific stocks are going into the portfolio and when. Thanks for watching, and I will see you in the next video.